Financial business and management. This will be lecture 4. Financial management, you emphasize on proper planning, well thought of expenditure, to be transparent towards the public, and also encourages the department to spend all their money in that particular year. And it leads to the medium term expenditure framework and also the Public Finance Management Act 1 of 1999. So the MTEF was done in 1998, and it goes over the 3-year rolling over, and it's a zero-based budgeting system. So the zero-based budgeting system means that every year the company can start off as zero again, so then they can accurately check what the expenditure is. And obviously, current projects must be determined when they consider the budget. So the advantages, here we're looking at planning, allows the planning to set in place beforehand, so then the department will know. Then also, because it's in a 3-year period, it allows the government and the department to understand and find what is the most appropriate way, affordable way for the future projects. It also allows the government to make political decisions because then they know more about the budget, so that which can improve the service delivery, and the government is able to manage the public finances more effectively. So there are 4 principles of the MTEF. Okay, the fiscal policy and the budgeting framework, the policy priorities and the public expenditure, the political oversight of the budget, the budgeting for the service delivery. For the first one here, we look at it relates to the function of the treasury. Our taxes are collected by SARS, and this money is used by the government on its spending plan within the economy, the fiscal policy. Then also the medium-term spending plans of the national and provincial department are determined by the fiscal policy. So SARS, as we know, is the South African Revenue Service. Their legislation to collect the revenue and ensure that compliance with the tax law. It provides enhanced and transparent and client-oriented service to ensure optimal and equitable collection of revenue. Authority, typically taken if there is a threat that the government cannot honor its debt liability. In economy, austerity is a policy of deficit cutting, lower spending, and a reduction in the amount of benefits and public service provided. The policy priority and public expenditure. Here we're looking at the government has a certain amount of policy priorities in terms of where the money is spent. So in South Africa, a certain issue exists, for example, the high unemployment rate, the healthcare services, and also the high crime rate. And given these, some areas constitute priorities for the government spending. So the MTFS also allows the government to plan its spending over the period of 3 years. Here we look at the political oversight of the budget. There needs to be a close link between the priorities and the government's budget. The political oversight of the budget allows the top level of government to be responsible for policy and budgeting planning, also ensuring that all departments' spending plans are linked to the policy priority, therefore to healthcare delivery. Then look at your budgeting for service delivery. Here, the MTSS is of no use if the remains on paper, so the MTFS must be used and implemented. Ultimately, our goal in South Africa is to improve the service delivery and to the lives of all our citizens. And the Financial Act assists in implementing that. So, the public finance management, okay, so the PFMA was publicized in order to, 1, regulate the financial management in the national government, ensure that all revenue, expenditure, assets, and liability are managed efficiently and effectively, provide for the responsibilities of persons entrusted with financial management in government, and provide for matter connect therewith. So it is an important part of the legislation with respect to the national government's goals, objectives, where the fiscal discipline, transparency, and accountability are concerned. So, responsibility of persons entrusted with the financial management. Each department and constitutional institution must have an accounting officer. The accounting officer is normally head of the department. The accounting officer is also responsible for the effective, efficient, economic, and transparent use of the resources of the department. Prevention and unauthorized, irregular, fruitless, and wasteful expenditure and loss resulting from criminal conduct. Irregular activity should be reported in writing to the Treasury. So now we're looking at budget. No business can be successful without planning the budget, the planning for the future and retirement, current and short-term needs, and when earning capacity is lower or nil, what do you want to achieve? So the format of the budget, it should be done monthly up to 12 months ahead. The medium-term budget is approximately 3 years, and the long-term budget is approximately 3 years to 50 years. Must be realistic, must include different scenarios, need to provide for the holidays, and include all sources and uses of cash. It's a plan for the future. So besides it being realistic, it also must be tested regularly and also must be updated monthly, drawn up by a responsible person, and must contain all variables. So now we're looking at the variables, the patient seen. So the physiotherapist can make money only by seeing patients. The capacity to see the patient must be known. How many patients can I see? So hint to depend on average. How many patients in your physio practice see, accommodate per month, to get an accurate measure for your outline of income. So if we look at the activity, the physio can make money by seeing patients. The capacity of seeing patients must be known. So example, 8 hours per day, 4 patients per hour, 20 working days per hour, so equals 640 patients. So if we charge at 300 Rand per patient, that's how much you'll be earning. For example, new practice, 4 patients a day, 20 working hours per month, you'll be earning that per month. The variable fee per patient. Determine the fee that you want to charge by calculating it. Test the market to see how your potential patients will react to it, and then be realistic when making the market segmentation. Other variables, you have collection of cash, expenses, operational capital expenses, taxable income, and bank balances. Now, when we're looking at the bank, what should my bank balance be? So your personal bank should never be overdrawn. The practice should always have one bank account. It is easier to control and is cheaper. Although the interest on the practice overdraft is tax deductible, great control must be exercised. Running expenses, you have rent, telephone and cell phone, electricity, stationery, insurance, bank charges, service, training, loan repayment, furniture, and salaries. So what is a business plan? It is a summary of a business opportunities, defines and articulates how the management team expects to seize and execute the identified opportunity, and guideline for writing a business, to create a framework to guide in order to implement for the objective and relative activities. A second function of a business plan is to persuade a decision maker to invest in your project or your business. The aim of a business plan to operationalize the focus area of a spending agency for a specific year or period, to identify the area of progress and performance, guide growth, raise capital. So the objective of a business plan is to work smarter, be future-oriented, test ideas, be result-oriented, manage stress, motivate. So your business plan should include a mission, vision, objective, SWOT analysis, and strategic approach. In your action plan, here you're looking at costing, where does the initial capital comes from, employment of capital, how much will you charge for your service, How much service units do you estimate to sell per week, per month? What payment arrangement will you have with your customers, and your income estimated? So your action plan also includes executive summary, quick management review and short overview, current situation, background information, key issues, SWOT analysis. Your marketing plan, you're looking at objectives, marketing strategies, action plans, projected profit and loss statements, and control. Preparation, here we look at location, building, permits, legal requirements, inspections, building and health inspections. Construction, here you look at architecture, so you want to get plans drawn, get plans approved, you want to get tenders and quotes, building and equipment. So other points in the business plan, you want staffing structure, policy guidelines, patient administration, cancellation appointment, and patient records. Staff, you want to have a letter of appointment, the uniform, the salary, code of conduct, grievances procedure, hours of work, performance appraisal system. And then what is value added tax? So the tax levied is at 15%. Okay, in the medical practice, it is the levies on the charge to the patient and the product sold. Once registered, however, the VAT vendor can, however, deduct the VAT paid on obtaining service and product for the business. The amount of tax payable to the receiver is the difference between these two totals, to ensure that VAT is only paid on the value added to the product, hence the name. Registration as a VAT vendor. Compulsory registration. Any practice or business with a turnover of more than 300,000 per annum must register within 30 days of becoming aware of the fact that the annual turnover exceeds 300,000. Voluntary registration. Any business with a turnover under 300,000 may register VAT to be able to claim the input VAT paid out.